Welcome Josiah, Bob, and Marilyn to my informal question and answer session. This is your opportunity to ask the questions about bookkeeping that are bothering you. Remember, there is no such thing as a dumb question. Let's start with you, Josiah.
What is the accounting equation?
Assets equal liabilities plus owner's equity. Okay, Marilyn, your turn.
What is the primary purpose of bookkeeping?
To systematically record and organize a business's financial transactions to provide a basis for financial statements. Okay, Bob, you're next.
What is the difference between a debit and a credit?
A debit is an entry on the left side of an account, and a credit is an entry on the right side. They are used to increase or decrease different types of accounts.
Which accounts increase with a debit?
Assets, expenses, and losses.
Which accounts increase with a credit?
Liabilities, owner's equity or capital, and revenues gains. Sometimes debits and credits are a little confusing. Now that you guys have got the hang, the floor is open.
What does T account refer to?
A visual representation of an individual account like cash or revenue, shaped like the letter T, with the left side for debits and the right side for credits.
What are assets?
Resources owned by a business that have future economic value, for example, cash, accounts receivable, and equipment.
What are liabilities?
Obligations a business owes to external parties, for example, accounts payable, loans, and unearned revenue.
What is owner's equity or capital?
The owner's residual claim on the assets of the business after deducting liabilities, the amount invested by the owner plus retained earnings. Marilyn, those were good questions about the types of accounts.
What are accounts receivable?
Money owed to the company by customers for goods or services sold on credit. It is an asset.
What are accounts payable?
Money the company owes to suppliers or vendors for purchases made on credit. It is a liability.
What is the difference between cash basis and accrual basis accounting?
The cash basis records revenue when cash is received and expenses when cash is paid. The accrual basis records revenue when earned and expenses when incurred, regardless of cash flow. Just so you know, the accrual basis is the recommended method for recording transactions.
What is a journal entry?
The chronological record of a business transaction, showing which accounts are debited and credited.
What is the general ledger?
A collection of all the accounts that a company uses, summarizing the changes, debits, and credits that occurred to each account due to journal entries.
What is a trial balance?
A list of all accounts and their balances, debit or credit at a specific point in time, used to verify that total debits equal total credits. Marilyn, excellent questions about bookkeeping records.
What are the three main financial statements?
The income statement, profit and loss, the balance sheet, and the statement of cash flows. These statements are the end result of bookkeeping.
What does the income statement show?
A company's financial performance, revenues minus expenses over a period of time, resulting in net income or net loss.
What does the balance sheet show?
A company's financial position, assets, liabilities, and owner's equity at a specific point in time. Josiah, great questions. These statements provide management, owners, and outsiders the information necessary to aid in making business decisions.
What is a chart of accounts?
A list of all the account names and their assigned numbers used by a business to organize its financial transactions.
What is bank reconciliation?
The process of matching the bank's records bank statement with the company's records cash account in the general ledger to ensure all transactions are accounted for and the balances match. Good job, Josiah, Bob, and Marilyn, and thanks for dropping by. Hope this session helped.